What's going on, guys? Welcome on in. Happy Tuesday. We are live. It's been 20 minutes since the open. Had a dentist this morning, so it took me a second to get back into the get things booted up. But we're here, so we're looking to see what happens. The situation is that the market is up a little bit, nothing crazy. It's kind of like yesterday. If let me go to the 5-minute chart so you can kind of see a better view of this, and then zoom out the past couple of days. So, gapping up a little bit, I don't know, man. This is just like, we haven't broken this range. It's not really doing much. You look around, yes, we're trending higher on the Dow, but choppy nature of that. Same with the Russell, right? Russell, I guess, has been going lower. Different story there a little bit, but kind of a choppy nature of the past couple of days, really since Friday, Monday, and then today. So how long does that go on? I don't know. In the meantime, I have a couple swings we've been sitting on, and I entered another one yesterday, which was lows on the live stream. Literally last second, it did gap up substantially, which is great. So we're up, but since it's open, it hit 268. My target was, if you recall from yesterday, 269. Honestly, I'd like to see closer to 270, but my target was 269 when I originally mapped the position out. I entered it pretty much at the close yesterday. So we're up like $3 on the position, but overall I still need to see about a $4 move from here north to get my profit target to be hit. So we'll see what happens. It's only 20 minutes after the open. Are we surprised by the gap up? Not really. No guarantee it was going to happen. The setup was there. It did break the level at the last second. Home Depot, kind of a similar looking chart. Well, actually a stronger looking chart, to be honest with you there. On Home Depot, the thing with Home Depot, it was either this or Lowe's. What was the play? I figured Lowe's was had a better close, a little bit of a stronger close. They both closed pretty strong though in the grand scheme. So they were both, fair shots. I thought Lowe's had a better, bigger picture chart as well. Although Home Depot was breaking up over the highs of this year, which is great stuff to see. And then you think it has potential to push up into the 400 to 410 level. I think is fair in the coming days, coming sessions. Maybe it gets 400 today. Maybe it does, and we'll see. But and maybe this would have been the better play. If this goes north of 400 today, then based off how I would have risked the position, I think that would have been the better bet. So if I got in yesterday at the close, risking the lows of the week, or I guess the past couple of days for a 1.5 to 1, 400 would have to hit. So it needs to get to 400 for that to be like, oh, that would have worked. And then Lowe's needs to go to just shy of 270, 269, 270 is where that needs to get for me to say, oh, that would have worked too. So we'll see what happens. I think Home Depot looks better, but Lowe's had a bigger gap up. Home Depot looks better off the open. Similar situation. Right now I have two that I'm using. One is Arctic Funding and one is One of One Funding. Arctic Funding because they allow a shit ton of stocks to be traded, and then One of One, I started with them a while ago, and I use them pretty much for only anything but stocks. Really, they have some stocks, but not as much. The selection's pretty shitty, relatively speaking. At least on their trade locker. Maybe on DX Trade they've got more stocks now. I don't know. The thing that's stupid though about that is that the DX Trade offerings are no app. I think they recently rolled out an app with One of One, so you can't trade on your phone, which is like not a huge deal, but I like to swing. So sometimes I'll get an alert, or a level break at a certain point in the day that I'm not at my computer, and I'm like, oh, I would like to be able to get in. But at the same time, I'm at the computer a good amount of time during market hours, usually. So, or I can take my laptop if I need to, if I'm on the move. But it's kind of annoying. But those are the two that I'm using right now. I'll go into the dashboards of them probably at the end. Well, the month's almost over, so I'll go into the dashboards. We'll go into each of the dashboards, so you can see that on the September recap. So you can kind of see inside how they look and stuff. But I have a funded account on Arctic Funding, and then the One of One. I have a funded account there, and then I have two challenge accounts, one with One of One and one with Arctic as well. Two $25,000 challenge accounts, and the funded account's a $10,000 account. So Plan is though, once we fund, if I just keep doing the same things I've been doing the past 6 months, I'll get there. I don't really care how long it takes. Once I fund the 25K accounts, I'm going to buy the $200,000 accounts on those same prop firms, and then just play the 200,000, trade the 200,000, trade the 25K accounts as I was, and then just have a trade copier, boom, to the 200K account, and that's it. And then just, roll with that. That's the plan. That's the scale plan. Pretty straightforward, I think, at least. We have a swing on Roku still sitting there. Man, it was so close to our take profit here. This is my first target. I think we can get more than that. I think we can actually get up into mid 80s, up in here. Gap to fill. But I will take most of it off at that level. Just haven't really gotten there. And then if it comes back to my entry before hitting this point, I'm out for break even. So we're waiting on that to kind of do its thing. Crude oil's up a good bit because we got the hurricane stuff going on. I think, I don't know how much that really matters. Oh, you can say, yeah, it does. I don't know. Is that why Lowe's and Home Depot are gapping up? I don't know. Maybe you can think that way. Maybe it doesn't really matter. Chart's a chart at the end of the day, in my eyes. Trade futures now haven't learned in the past couple of years. Well, the biggest thing, to be honest, dude, that I would say is you want to track your data. Like, prop firm aside, like realistically, don't even sign up for one until you have proven that you're profitable with paper money or with smaller money, because if you jump into one, like, without proving that you've, what are you kidding yourself? Like, why are you playing that game? You're just throwing money away. You could play that game and it would be a cheaper way to learn, right, than maybe using your own money potentially, because you would lose maybe potentially less. But then again, you can play the game of like, well, I just keep paying, keep charging the credit card and buying challenges, and it could be an unlimited, game that you play, versus if you had $1,000 and you threw into an account, once that's gone, it's gone, So slippery slope. But the biggest thing I would say is track your data, get good at what your strategy is, follow one strategy first, track it until it's profitable, and then roll from there, which could take a long time. It didn't, it's not it's not like a simple thing. Oh yeah, just do that. It's easy. And then no, it's not easy, but there's a lot more to dive deeper into, like the psychology of stuff. The strategy, I think, is very simple. Once you operate it the same way for an extended period of time, taking the same exact trades, pretty much. Of course, nothing's the exact same, but taking the same setups, boom, boom, one after the other. And if you do that long enough, you'll have pretty good data. And then from that data, you can make adjustments. Okay, now during the times of, during pre-market, I lose money, so I'm not going to trade pre-market. Boom. Eliminate pre-market, trade the same way. You should be doing better than what you were doing. Okay, great. Let me see. I'm still not making money. When I trade, shorts this way, I lose. There's little things you can be tracking, and you'll start to see through your data what's good and bad, and then you just slowly, you kind of do is you slowly pull away the fat, around the strategy until you have a core strategy that you can operate. And what ends up happening, at least I find, is that you end up doing better when you trade less. Less tends to be more. And when you don't give a shit about it, like when you stop caring about trying to make money, when you stop caring about passing this, when you stop caring about being profitable, you tend to do much better. That's what I've found. The months that I have done the best have been the months that I've traded the least, and that I've given no shit. Like, when I say that, I mean I have, at least in the hierarchy of priorities, I have other priorities outside of the market that seemingly take control, like on that given month. Or I focus more on this or on that, and then the trading stuff kind of just falls into place because I'm operating it as I should be, and I'm only doing what I should be doing. I'm only taking the setups that are actually there versus trying to find extra stuff that isn't necessarily, or isn't always there. That's what I found. So yeah, we're getting pulls. Yeah, I mean, that's not the best daily chart. I mean, I could, in this case, go stop break even. I'll give it a retest, but I don't really want to see it below 260. That's what I'll move my stop on the lows to 260. pretty tight risk on that now. Just because it's like, with the big move this morning, the big gap up, if you get one, like this is the thing. You know, you get one of these, and then if it starts to fail, like if it can't hold up, then it is what it is. We were just about $1 short, $1 shy of our target, so I didn't expect it to happen in a day, but it is what it is. So if it can't, I'll give it the room to retest the low 260s, and if it fails 260 on the retest, if it retests all the way, we'll see. If it fails that, then I'm out, because then that would be a pullback through here, which would then be like more than a back test in my view. You know, my original stop is 258, but after the big move today hitting 268, I don't want to see it back test $10. You know, after being $1 away from my profit target, it's like that's not really, you know, worth holding all the way back through, in my opinion. But Home Depot looks better, man. That looks better. Just can it get to 400? We'll see. TSM was on the list from yesterday. It does look interesting. I'm not going to touch that, but it does look. You know, these are just like these are the stocks that I just found on my list to be pretty interesting. Netflix was also on there. I mean, she just can't fucking break the fucking 712. Like, holy shit. It's like, can you just push it through? I would say that this is worth putting a level here on this guy. You know, give it like $700. That's also I can move stop to 700 on that bad boy. Tight stops. So these are not, you know, because you've got movement to the upside. We've had nice moves. If it can't hold those levels, then I'm out. You can always get back in if it breaks back above. So keep the stops tight, keep it small, you know. Roku, we've been in, nothing really crazy going on there. A lot of lines I got shit on there, but from, you know, the past, but not that it really matters, to be honest. The trade setup was pretty straightforward, but we're just sitting on it. It's, you know, $4 or $5 away from my break even stop, and it's, you know, $5 away from my take profit. So it's like in between. But that's also not surprising, though. Am I not surprised by that? Not really, because check out what the S&P's been doing. Not much. I mean, chopping around. Yes, it broke all-time highs. Cool, but then it like has not pushed. Like it broke all-time highs, but it didn't just go, whew, you know, and give you like a nice momentum thrust. It broke all-time highs and then said, sorry, just, you know, we got nothing here. We got no push. We got nothing for you. Check out the 5-minute there at 10 a.m. Whoop. I wonder if there's news. Was there news release at 10 a.m. where like something came out? Maybe. Today's the 24th. Consumer confidence came out at 10 a.m. Oh yeah, here it is. Consumer confidence, September consumer confidence, 98.7. Consensus was 104 versus the August revive. So it came in lower than what their numbers were expected to be. Okay. Cool. Not cool. I don't know. But consumer confidence moves the market as we've seen, as we are watching right now. I wouldn't be surprised if it bounces, right? If it bounces back to like, you know, somewhere up in here shortly. But it tends to move the market in with a nice, you know, fat candle up or down. Now, will we get follow through behind that? I don't know. But it tends to move the market. So you always got to be careful when consumer confidence is out, because it could throw you off if you're in a trade that's like a, you know, short-term day trade or something. You know, you can get spiked and wicked out of it, and then like, oh fuck. You know, it's just a pain in the ass. So, you know, he's got to be mindful of it. Swing trades, I don't care. But day trades, yeah, you definitely got to be mindful of the consumer confidence, which who would have thought, right? Consumer confidence, like who cares? But like, is that big of a deal for the market? No, I don't think so. But it gives you enough of a reaction that you got to be paying attention to it. 10-year is up 0.45. It's bounced nicely after the rate cut. It's kind of come back, which is kind of funny how that works, right? 10-year goes down ahead of the cuts. You think, oh, 25 cut probably the case. And then no, oh, 50 is the case. Boom, holy shit. And then after the 50 comes in, it makes you think, wait, the Fed's going to be kind of more aggressive in the next couple months. And then the 10-year bounces up. But it's just kind of a retracement, I think. I wouldn't get too crazy about the 10-year until it gets over 4%. If it gets back over 4%, I'd say, okay, that's something to be thinking about. But until then, I wouldn't bother too much. I wouldn't really worry too much about it or think too much about it. Can't like your channel. Appreciate it. market green or red today. I wonder if you're saying that as in like you physically can't, as in like it's not allowing you, or you're just being an asshole. Market is like, it was green for a second, it gapped up, and then now it's red. But overall, it hasn't done shit really. I'd say we have to like, until if we failed like under 560, then it gets, okay, interesting. Or if we push above 575. But we're not that far off in the grand scheme from 600 on SPY, which is crazy. Like a 6,000 S&P. You go back, 6-7 months ago. No way. And it could happen. Bitcoin hasn't done shit the past couple of days. Gold's up a little bit more. What did it do? Did it hit? What did it hit today? 2640. I mean, I got out last week at around 2620 was my target. And so, but it's gone another $20 from that level, which is cool. But gold's very strong. Silver has silver. Silver up 1%. Silver is kind of trying in this consolidation. I don't know. I mean, big, consolidation zone hasn't done a lot either, but it's looking kind of strong. And if gold keeps the strength, I wouldn't be surprised for silver to pop through and then have a breakout up towards the 3250s and maybe even higher after that. Because you look in the bigger time frames, I think that this has good potential. But we'll see if it does, if it can break through. It's just been kind of slow. Silver can pick up speed pretty quick though when it does pick up speed. No, the only thing was really consumer confidence this morning, where that moved the market decently. You had a couple minor things, Case-Shiller home price index, 9 a.m., but consumer confidence came out and apparently it was lower than expected. So the market dipped. Not that doesn't, I don't know if you can say, oh, consumer confidence coming in low means bad. No, I don't know, not necessarily. It just moves the market. And it moved it, like once that came out at 10 a.m. Eastern, SPY did take a nice dump. Because it was not really doing much, and then that was a big candle. But now it's retracing back, so we'll see. Yeah, Home Depot looks for this. This looks like it's going to make a push. Not 398. Only got to go $2 to 400. That looks good. I see of course I get in. Of course my Lowe's is lagging. Home Depot going up is probably a good thing for Lowe's. We're literally 50 cents shy of the TP this morning. Netflix, again, same thing as the past couple of days, right? Tries to get going. Same thing as Thursday. Popped through, came right back. My view is this. Like, this could be kind of like that ascending, people say ascending way. You get patterns are fun for, and however you want to view them. They're cool until they don't work, right? But take it as grain of salt. You break above this area up here, probably looks really good to go for a push. 725, 750 maybe is in the cards. But if you break this level, down here, not great. So kind of be, it's kind of the line, if you want to call it, if you care about trend lines, is at 703, give or take. As the day goes on, it will, push higher. I would say 700, just kind of round that baby out. 700 is a good spot. You don't want to see it below that if this is going to push in the near term. Of course, you can break down, and then if the market wants to rebound next week or something, then it's there. But Netflix looks pretty strong on the bigger pictures, so we'll keep an eye on it. Tesla's up the most today on my large cap list, but in the grand scheme, that's been really strong. Not really, but above 260, that gets much more interesting on Tesla, in my view. Nvidia is still in a consolidation, waiting for that to make a move up or down. Apple's flat today. Apple's got some interesting action lately, but Google's down a little bit, AMD's down a good bit, Microsoft's down a little over 1%, and Meta's down 1.5, which Meta had been strong, breaking out to all-time highs. Not so much anymore. Amazon also had been strong. Now it's down 1.6 today. Russell's up the most. Russell's up 1.25. Russell is up the most. The NASDAQ down the most. Otherwise, we're in limbo. How's Generac? I forgot the ticker. I always forget the ticker symbol. GNRC. Check it out. Not surprised with the hurricane stuff. So yesterday it was up 3%. Today it's up 1.5%. You know, I mean, how big of a move is it? And is it because the hurricane? You know, I don't know. You get into that. It's like, if you want to tell yourself it's because of the hurricane, great. Maybe it is. But I find that these, maybe it's like it's today, tomorrow max is the time on that stuff. You get to Thursday and you're late. You're late. I think, at least. You can take a peek at some of the stuff that's come out. Let's see. What do we have? We have this. Is this the 12Z yet? No, they do. The 12Z just started coming out. Oh, shit. Okay, cool. So this is going to have this thing pretty much today, tonight, probably forms into a tropical storm if it hasn't done so already. Officially, like a named storm. And then it's still not loaded out yet, so we'll come back to that in a minute. But essentially by Wednesday night, so tomorrow evening, you got this thing just off the coast of Cancun pretty much. Looking like a pretty decent storm, probably at least a Cat 1 at that point. So it's going to strengthen pretty fast. Yeah, they still haven't named it yet. So yeah, by tomorrow afternoon, they have it being a hurricane. So it's going to strengthen today and tonight. It's going to pick itself together pretty fast. You'd think. This is not organized. It's not very organized. You got some pretty good storms, developing, but it's not very organized. I nerd out with this stuff, so I love looking at this up. I'll literally leave this up on my side of the screen like all day just because I like looking at it. But yeah, they currently have projections of this thing getting up into at least a Cat 2, pretty much. There's some down here that don't really get it going, but I don't think that that's seemingly the consensus view here. Looks like at least a Cat 2. Probably, I mean, if I had to guess, I'd say you get to a 3 at some point, maybe even higher. It would be crazy to get to a Cat 4, but it wouldn't surprise me with how warm the Gulf is. So the hurricane trade and the hurricane play, I think, is there. The only thing I like to, I get, it's not sketched out, but I like to be early on that stuff. So I don't want to be sitting there, like tomorrow thinking about it. It's like if you're not in it on what you want to be in, and it is what it is. But track wise, pretty clear that we're gonna go just into that Big Bend of Florida area for now. Yeah, a good little spread. Some a little bit further east, some a little further west, but the Big Bend area, Florida, looks like it's gonna get rocked. But once it forms officially, you get better data. So then we'll be able to tell a little bit better. Oh yeah, you know what I saw today? NEO was up nicely. I'm getting so hungry right now. Need to eat something soon. NEO broke this little consolidation here. Had a nice move off those. The only problem is, like, I wouldn't trade this. It does have, I think, potential to make a push up into this area. $7, but I won't trade this. Although that is a great setup, I think. It's just a matter of, this. So, you're huge down. Like, you catch the bottom, and this could be great. But is it the bottom? I mean, I'm not trying to pick the bottom and say this is the bottom. I don't know. All I see is humongous downtrend. So pressure to the downside. Any pop this thing gets, you kind of tend to see a lot of people who are bag holders trimming into it, selling into it to just relieve some of their pain. So we'll watch it, but I just thought that was interesting because it was up a lot. Lee. Look at that. L-I, Lee Auto. Lee. Big move as well. What was that other one? I forgot the name of it. Chinese stocks have apparently done well, though. Yeah, Baba did really nice move there in Baba. I did see that at the gym today. I saw like a quick thing pop through on XPV is one I was looking for. Pop through on CNBC, and it was like Chinese stocks making some, massive moves or some. I forget what the headline read, but it said something. I was like, oh shit. Because I haven't been watching them. Tesla sell off. Let's see. What is that? On that 10 a.m. That 10 a.m. drop. That was a big candle there from 256 to 253s. almost $3 in a candle. But now you're seeing the market's kind of trying to stabilize itself a bit. I have found, or at least from what I have noticed, the what's it called? The consumer confidence reports that come out. They move the market, but they tend to not be like, it doesn't tend to be like consumer confidence comes in and the market either rips or tanks and then it just goes the rest of the day up or down. We tend to see like, a retracement, at least to some degree in the following 20, 30 minutes or so of it. That's what I've just seen a million times, I feel like, with consumer confidence. Yeah, that was a big, that's a big candle though, which is not surprising on with the confidence report coming out, but yeah, it's good shit. But yeah, I haven't seen anything that really interests me. Like I said, the Home Depot and Lowe's yesterday, cool. Will they end up panning out? We'll see. They're both up a lot, or not a lot. They're both up a decent amount today, so it's like cool so far, cool. But will the follow through be there? I don't know. Partially, you want the market to help you out too, which you're not really getting. Caterpillar with a big gap up too. You're not really getting the help of the market either, because market kind of just is in indecision mode, which not a massive deal. Here's Home Depot looks much better though than Lowe's. Not a massive deal, because that's why you look at some of the individual stocks, because they will move in the times the market's chopping around. They will move more, but to a degree, you need some follow through in a direction for you to get some good action. Like the problem is like for a stop to hit, you want to see the market sell off. For a take profit to hit, you want to see the market probably push up. It doesn't have to go crazy, but it has to be relatively strong, or at least something moving. Dow, S&P, maybe the Nasdaq's having a good day, the Russell, but like all that stuff is just choppy, and it hasn't really moved much. Yeah. When you get a candle like that too, especially if you're not expecting it, not a bad idea to just lock some gains. Not bad at all. Nothing that I'm seeing, man, that looks really... I'm looking around at other stuff. I know ExxonMobil's done well off that big move down to 107. I think I actually traded it back, and then I think I lost on it. That was one of my losing trades this month. Snap back pretty big. I think I was just being a dumbass and trading it short when it was already down so much, which looking back was stupid. But I got my setup on the 5-minute and just like kind of hoped it would work, even though the bigger time frames were maybe... Bigger time frames was not bad. I think it was like we were breaking underneath this low. So I was like, okay, it's fair. But also for ExxonMobil, it was already down like 2-3%. Look at the past history of it. Does it tend to move down 3% many times in a day? Not very much. So for looking for it to go down 4% on the day, whatever it was, wherever my target was going to be, that was just, me being kind of... Like, you can say, oh, you're a dumbass after the fact. Yes. But at the same time, when you get your setup, it's like, well, it's just more of like is this a super A+? And it's, of course, subjective, completely subjective. But when you think about it, it was like, well, do I really think this is going to have... I mean, it could. So it's not like you took it. It's not like it was a terrible trade. Fair trade, but like a trade that like you didn't have to take. If it worked, you wouldn't really think much of it, I guess. So you can kind of go back and forth on it. But it's one of those where I kind of wish I was busy and didn't see it, after the fact. Like, yeah, I kind of wish I was doing other stuff and just happened to not see that chart set up. Because you don't think about... I think about that too. It's like sometimes you get setups and it's like you look after the fact at the end of the day, oh man, that would have been really good. Would have been really good. But you just didn't see it because you were doing something else, you're busy or whatever. I was working on something and like I wasn't watching the chart at the time, and like how many times does that happen versus how many times are you watching it? I think it blends out over time anyway. so I don't get too caught up in that stuff. Woulda, coulda, shoulda. And NASDAQ down 0.3. The Dow's barely up, but flat. Russell barely up, flat. S&P down 0.2-ish. HD. Yeah, this looks good. I mean, this looks like it's going to set, it wants to break this flag to the upside. And I would think that if it does, you're going to get $400 shortly on Home Depot. Would I trade that intraday? No. Home Depot on the 5-minute to me is not interesting. Home Depot from a swing perspective, yes. On the 5-minute chart, not very interesting. I'm not a big fan. But from a swing perspective, if I had gotten in yesterday, yeah. But we got in lows. So we got in lows. And unfortunately, lows today, I mean, it's up, but it's up 1%. But it does not look as strong intraday as Home Depot. But you never know. Maybe it's if it is playing off the hurricane, if that's partially driving it. It's only Tuesday. We got Wednesday when the storm will probably become substantial, become a hurricane tomorrow, and then we'll see if it makes a move. If it doesn't move tomorrow and it's like kind of sitting, let's just say it sits in some sort of range here, and then tomorrow the storm's a hurricane, and then lows starts to kind of fall back, retest this level that was the breakout point, not bounce off it, and kind of push right back down. Yeah, get out. It's just kind of one of those. No momentum here. Get out. Would be my approach to it. So Netflix continues to bounce off the line pretty well. It's like Netflix is one of those where I've been watching it and I'm sitting here. I got in back in here, and then my stop was originally down here. I moved it up to 700, so I can't lose that much on it. But we just haven't gotten the follow through. But at the same time, we're like right up against that level where I can see this thing, any day breaking through. It did break through, kind of a false break, but also not completely a false break, because if we had a true false break, it would pop through and then it would go, we get hammered. We didn't get hammered in the coming days. It actually is still holding higher lows. Those are the situations where, it still has a shot. We'll see how legitimate that will be, but still has a shot. SPY going for low a day. And then it bounced a little bit. I wonder how much of the maybe, if you go back in time, let's just think. We're just kind of thinking a little bit here. Like, we kind of have been in a trending environment. We had a pretty shot. This is horrible. I remember being in here in August and I was just getting I was frustrated. It was a pain in the ass, but I was just losing a lot in there. Nice move down, and then higher low pulls in. You're kind of, despite, yes, we've been going up, the move was here. Since then, it's been a week and a half of not much, not much in terms of price action and movement. Like SPY, has been like a $5 range, $6 range, So that's not ideal for momentum. If you're looking for breakouts and momentum and stuff, if we start to unravel, then you have downside stuff to be looking at. But I looked at a bunch of charts yesterday on the stream, and I found a couple that look good. The Home Depot, the lows look good, and other than that, I wasn't super impressed with stuff. So we'll just kind of leave it alone until maybe this, we get a push and then a consolidation. There'll be just different sectors that'll kind of rotate through, and that's kind of what we've been seeing. If you go to fear and greed, you will see that pretty clear. We're in greed, I believe. Yeah, we're mid greed, which is okay, whatever. But yeah, strength and breadth both trending up to the highest points it's been this past year. Pretty much. Breadth is not there yet. Actually, yes, it's about to be, because the highest point of the year was literally January 2nd, that time frame, and then it came down from there. So we're approaching that point, which just tells me that you got better strength under the surface, like a lot of stuff is moving up versus like, 3, 4, 5 stocks that are leading the markets higher, So that's a positive sign. Like this and this tells me like bull market rotation versus, more of a downside, momentum play. I wouldn't be trading down. I'm not interested in trading downside, bigger picture when you have, the trend we've been getting here. This starts to unravel and we start seeing this number pushing down, this number starting to roll over nicely. Then it starts to change your mind and you probably have good downside setups, and it's a matter of now, will they pan out? And then, what sectors are the weakest and going, kind of one by one through that line, that list. So I'll watch this guy. Kind of curious to see if Home Depot will push through today. We can pull up Generac too. Yeah, it's been pretty strong. Rip and dip. Yeah, it could be too. Or, when you kind of just, I don't know. You have a weird, like it hit all-time highs, but it's like a soft all-time high. Like it hasn't like ripped all-time highs on SPY. Is that partially because this is the weakest time of the year, historically speaking? Maybe. August not fun either, yeah. No, I think there's a lot of people, depending on how you trade though, everyone is different. You might trade in a way where you play a reversion to the mean, and that could have done really well. I'm just saying maybe that could have done well. I don't know. I don't trade that way, so maybe it wouldn't have done well in August. But I just felt like you had choppy action. You had what I was seeing was decent setups long, and there were some shorts in there that looked okay to me from a momentum perspective. And then there just was no follow through. Like it would break out to the upside, break a pretty big level, like, oh, here we go, and then right back down. And then you'd be like breaking down a big level. Oh, maybe the market's going lower. Great, down, well, short, sure, breaks down and right back up. So it was like, okay, cool, or not cool. Like this is how it's going to be. But that's how you go through phases like that. And so the argument is then, do you try to adapt to it and trade that way, or do you just try to, if you don't trade that way already, or do you avoid that and try to avoid it as best you can and then wait for the better conditions to fit your strategy better? I have personally found that it's a lot easier mentally to situate yourself with one strategy and then get an understanding and a feel for the ups and the downs of like go through, a year or two of trading that strategy. I'm almost to how far? I'm not almost. I'm about a year and a half. I'd say 18 months. No, is that 18? Yeah, a year and a half, 18 months. Yeah, about a year and a half roughly through trading one strategy only, pretty much. Not pretty much, like really only one strategy, looking for the one thing. And in that span of time, there's been like 3 or 4 like pretty good stretches of time where the market was not aligned at all and just great setup, chart looked good, everything was there, just didn't work for like 3, 4, 5, 6, a bunch in a row. And that was like it's good to feel that, because then you start to be able to identify that sooner and faster and then handle it better, each time it comes up. Beyond that, you start to handle it better. And then I think that that's a better approach for me. Everyone's different, versus trying to trade that environment and change it, because then you can get yourself caught up in shopping around. When do I go back to my original approach? And then when do I go to this approach? When do I, it could get complicated. The more experience you have, the easier that would be to do, and the more you have the ability to do that, I think. But it can get complicated and a little more challenging. Wasn't doing reversals in August back then. I was trying to catch trends. Yeah, because the trend would work for a bit, and then it would reverse. That's kind of how August was. But there's nothing wrong with like you can play the reversal trade all the time. In a very trending environment, it won't be as good. You can maybe find ways to make money, and I've done well at times in choppy environments because I was able to kind of cut through a lot of the noise and find the best quality, and then trade, that best quality, and I would find the opportunity, and that would be it. you can, and then there's times where, I shit the bed playing momentum in, choppy environments. But I think that it's good to, or I enjoy the cycle, like playing the cycle, like getting a feel for it, and then once you get a feel for it, like you get a lot more confident in how you handle, future market changes and shifts. Because I don't think realistically, like the markets will change slowly but surely over time in certain ways, but I don't know if it's to the point where like you can't trade one way for a very, very long period of time. I think you can definitely do that and just learn to know when it's good and when it's not good, and when to push the gas and when to just pull off the gas. Because you can do very, very, very well when it's good. And as long as you minimize the downside when it's not good, you put yourself in a pretty good spot, I think. So there goes Home Depot breaking out a little bit, trying to at least. I'm not trading that 5 minute. I think this would have been, well, it is what it is. It would be funny if Home Depot was to go harder to the upside, push 400, and Lowe's didn't, but yeah, the chart on Lowe's is not nearly as strong. The other thing about Lowe's, though, is that it did gap up, and that is a new all-time high. Yeah, new all-time high. It's currently at a new all-time high, which is what I thought would be a better momentum thrust, at least initially, which is why I chose Lowe's instead of Home Depot. I was like, hey, we breaking over, this high and the prior all-time highs from 2021. I like it. Whereas Home Depot, yeah, it's strong, very similar chart as of late, breaking over this high, but it's still got to go. All-time highs are here. Like Lowe's, chart-wise, technically has no resistance to the north here. Technically, you would say, no resistance because there's just no price history there. So I like that because when there's no price history, it's like, okay, cool. Let's see how far it can go. I like playing for those types of moves. But sometimes you get a push to all-time highs and then it goes, whoop, pulls back. Can't control it. I wouldn't get caught up in the hypotheticals too, because the problem is like 58%. If you gotta have a well, yeah, I mean, look at that move. Yeah, you gotta have a play where it's like, hey, I'm targeting this. If I get this, the way that you would play that would be a scaling, like the way to capitalize and to minimize the FOMO would be to scale. I personally don't really scale that much. I really don't. Because FOMO, for me, I don't have as much of a problem with it, I guess, as maybe I used to. I used to have a problem with it. But if you find yourself sitting there saying, oh, man, looking back, what I would say is when you track it and you have enough data and you track this a lot and you start seeing, okay, wow, I seem to be missing out on the bigger move here on a lot of the trades I've taken. Well, then that probably tells you we should be thinking about scaling out and taking. My approach for scaling out, everyone's going to have a different approach. I would say my personal approach would be have your first target as your kind of your goal. Like, hey, that's a spot. If we get that, I should make money. I should not lose in this trade. And then in order to make sure that occurs, you take off like 70%, 75%, just say as a rough idea. At that point, stop loss goes to break even on the rest, and then you go from there. Now, if you're playing cheap options or you're playing options and you only have one or two, it's a different story. So I know it's not as easy to say, but some sort of scaling out approach is a good way to go about it, or a movement of the stop loss to break even and then let it ride type of situation, saying, hey, I got a very nice move in my direction. Maybe I got a 1-to-1. I was risking 1 to make 2. Ideally, I've gotten halfway to my target. I'll move my stop loss to break even, and then now either we go break even or we go the 2-to-1 risk reward and we go from there, and that's it. There's a lot of ways to go about it. I would recommend not trying to change it a million times. Like just kind of pick a way to approach it and then just let it and then ride with that. Track that data for a while and then see where things kind of shake out. Yeah, and letting one ride, people, people, I love people who do that all the time. In the option world, and especially with options, because if you do happen to be there, that one, it's not very common to get those humongous moves. But if you happen to be there the day that you get a massive move, I mean, it's going to kind of, I can see it hurt, but it could make, even one contract, if you're playing a lot, let's say you're playing 5-10 contracts, I don't know, depends on the price of the options and how much you're putting in. If you're playing 5-10 contracts as an example, and you let one ride, and that one happens to go 3, 4, 500%, because it could happen depending upon the move, right? That could be a big ass move on that one contract, which could make you a lot of extra money in the option world. So there's a reason to play or to leave that, one or two or that little piece in the option world in case of that massive move. Yeah, to be honest, I'm not liking. Well, it's not that I'm not liking. It's just like we're getting not amazing action. Better trending action than yesterday. That's for sure. But really, I would say on SPY, I don't really care until it goes under like 560 to the downside. And then upside, you want to see it pushing back over like 571, 572, and then it'd be like, okay, interesting. But we're kind of in that like $10 range right now of like, eh. If 20% works for you, that's good, dude. That's good stuff. The thing I would say too is be careful. Now, this is kind of a different side of it. Be careful with the daily goals and stuff. I think because you can find that, I found from a psychology perspective, it ends up hurting more than it helps. So what I've kind of just submitted to is like, I do not control anything outside of what I mean, the market wise. I can control what buttons I press when I do, but I can't control if my strategy is going to work today or not, or on this given trade or not. And so what I found was that when I had like the daily goal approach, obviously like you go into that saying, yeah, you're not going to win every day, but still in the back of your head, you're saying, hey, I'm trying to make X%. I'm trying to make $100. I'm trying to make whatever the number is. I'm trying to make this amount every day because I, did the math, and that amount every day would equate to blah, 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 over the course of, see how you can get caught up into that very easily. And then it could cause you to take bad trades. You go, like, you lose one. Okay, no big deal. We'll make it back. You lose two. Now you lost two. To make that back and then hit your daily goal, it becomes substantially harder. But if you start trying to do that, it could end up causing you to take on trades that you shouldn't have taken. So I prefer just to have no goals, like literally no daily. Like the goal is to trade the strategy. In my view, trade the strategy the way that I meant to trade the strategy. And then if that doesn't work on a given trade, okay, whatever. If it doesn't work over the course of a lot of trades, do we have to reconsider the strategy, make adjustments, and go from there? It tends to not end up being that problem. The reality is like the strategy that I have, it's really more risk management approach than a strategy. It's like a momentum strategy, but it's like how you manage the risk. If I just operate that consistently, it makes money. So now it's like the battle becomes me versus me. Versus like instead of me versus the market. It's not me versus the market. It's me versus me. Nothing happens, won't trade. Yeah, good. I mean, that's the thing. If like this is, I mean, people could trade this, I'm sure. It depends upon the strategy, right? But this is tough to trade. Movements are not big, like very, very minimal movements. So that's tough. That's tough to play. I'm not seeing much else, man. So swings are just we're sitting on it. We're sitting up on lows, but it's like, we'll see what happens. I want to see it push through. We'll see. If it retests the 262 area, fine. Under 260, I'm out. So I move my stop up on that. Netflix, I don't want to see it below 700. And then Roku, we are just sitting on, needs to fall back to 70 for me to get stopped out, break even. So we're sitting back on those. Other than that, nothing else to do. Nothing else. Maybe silver sets up at some point in the future. I'll be watching that as an idea, but not right now. I'm not really a big fan of it right now. So we'll see. Otherwise, enjoy your Tuesday. I'm a dip. Peace.